Joining me right now is Ambrose Omordion, someone who understands how these numbers are running and how investors need to chase them. Ambrose, a good day to have you on the show, sir.
Yeah, thanks for having me. Like the rain here, I'm not hearing you. It's very faint. Can you hear me?
I can hear you very
I'm not
well. I can
hearing
hear
you
you.
at all.
I
It's
can
raining
hear
heavily
you.
here in Lagos.
Or I can hear you very well here, over here in the studio.
Okay.
So let's
Okay.
go.
Looking at the
All right.
figure that is emanating from
Go ahead. Go ahead.
the figure that emanating from the market, I will tell you. Okay. The figure that emanating from the market, I will tell you that the consumer goods remain outstanding. Yes, we have not seen much of the number in terms of Q3, but look at market performance for that sector from beginning of the year to this moment. I'll tell you that the sector have done excellently well. And the Q2, Q1 number of this sector have shown that yes, the FS gain that's also kind of reflecting their number as a result of stability in our exchange rate has supported that industry. Don't forget that in previous years, 2023, 2024, we saw a huge loss that threw most of these companies into red. They are not rewarding their shareholder for almost 2 years. But with this return to profitability, we're saying that yes, they are likely to start rewarding their shareholder going to the future. But investors are really at the crossroad at this point, looking at the prices these companies are selling compared to their dividend payout policy before now. Because the last 2 years, we have not seen dividend coming from that sector. Now that they are back to profit and their prices have gone up because of the recovering or kind of a turnaround in the industry, will they able to pay dividend that will support the current price we are seeing in this industry? That is the only concern investors are having. But for the market generally, we are seeing that the money flow have remained positive. Say that yes, there are a lot of fund entering the market. As a lot of the first step that CPN took their last MPC meeting to cut rate. We have seen from coming to the equity space. Not only that, companies in that industry, in the market or in the economy, have done also perfectly well in terms of payout, in terms of dividend. These are the things driving the market. But I believe that as we're entering the seasonality period, which is end of the year, expect that this seasonality is also going to play more on these companies that are into consumer goods and other because of the festive period. I believe that consumer goods is a place to be, but investors should also think twice because look at the price they are selling, their earnings, what dividend is going to come out from that at the end of the day. But because we're not in the market for only dividend income, capital appreciation is part of equity, equity investment, meaning that we expect to see this money flow that comes to the market to impact prices. And if these companies sustain their price performance, we have seen only just two companies in that industry that have released the results from Nigeria brewery and international brewery, and their numbers are not bad. But I don't discuss much on brewery sector, but I can say the figure that came out from that industry are not looking bad at all.
Exactly. Interesting. But let's take a look at some of those consumer goods company. Dangote Sugar, Boa Sugar, PZ Cosin, they seem to be very attractive and they seem to be very lucrative. But from what you are saying, we shouldn't just bank on them, but we should also be very careful around our investment. But from what we have been seeing on paper and what is being shown on NGS, they are very lucrative. They are tempting. Ambrose, take us through.
For me, like you just mentioned, Dangote, Boa Food, and others. So, all the what's it called, NASCOM, Honeywell, Northern Nigeria Flour Mill, Cadbury, Unilever, Nestle. They are looking good. I agree with you, but like I said, they are all coming out from their work position. They are bad state for now. But as you mentioned, sugar and the Boa Food. Yes, you can see that today Boa Food is almost above 600, approaching the 700 naira. It shared at this stage just in 3 years ago. That's that the sector have supported that stock to rally, and also they are also good at dividend payout. But we're seeing opportunity in stock like Dangote Sugar. This is a company that before now they are into consistent dividend paying. Before they run into this bad water in terms of the valuation, in terms of exchange unification, and not that throw the company into a red position. But gradually we are seeing that they are coming out of it. And all eyes are on Dangote Sugar result to see their third quarter. If they come out from their red position, that will be a sign that they are going somewhere. You can see their counterparts or also their, let's say, almost the same industry or the same family. NASCOM has moved from as low as 40 naira to 400 naira, 113 naira, 90 kobo as at close of business today. I believe that for me, I see potential in Dangote Sugar. It might not be a result of actually the merger that has been expected or the rights issue that has been expected, but I believe that if their numbers in Q3 can turn positive, that would be a plus for Dangote Sugar. That means if anybody is buying Dangote Sugar at this price, it might not be for just matter purpose, but just because you expect to see that there's a potential and asset in that sugar that are yet to be explored. I believe that there's a lot of potential in sugar if the management can put their heads together and also track and drive their company to where it's going. Yes, we might say that the recent commercial paper they just launched might sell some investors into panic also, like watch and see or stay back and watch. But I believe that with their plan to come to right, that might also help them also to reduce the commercial paper, and also drive their company to where they are going with real investors fund. That's why if they are coming to right, it's an opportunity for investors in that company to also increase their stake.
Exactly. But on the flip side, we saw companies like Union Deconsult, going the red side. What do you think would have happened to them? Union Deconsult, we saw their shares a little bit on the flip side that not that it wasn't that prospect per se, but a bit of misfeeling, a bit of shake here and there. But what do you make of the Union Decon priority at this point in time?
Come again, I didn't hear you with your question. Can you repeat your question?
I mean, Union Deconsult. We didn't see them in the same line. We saw Dangote Sugar, Dangote and Boa Food doing pretty well on the consumer goods side. But few weeks ago, we saw Union Deconsult making good headway in their shares. But just few days back, we are seeing them on the right side. What do you make of that? I'm talking about the downside of Union Deconsult.
Of the salt, I thought of the salt. I didn't hear you well.
Union Deconsult. Union Deconsult.
Okay. Union Deconsult.
Yes,
okay.
Yes.
For me, the Union Deconsult, you can see that if you look at that company, it has been in the cooler for a long time. It's just coming out now to see the price going. But the market need numbers. I tell you that price feed on earnings.
Exactly.
Without earnings, improvement is just the artificial. As we are speaking now, if the company can release earnings that can build on consistent that yes, their Q1, Q2, Q3 was seeing a lot of changes, that will further drive the company. But because of the nature of their business, we know that salt is very important item in cooking, but in other things. But I tell you, no matter how rich you are, you can't say because you want to pack all the salt you have into your soup. No. That means the market for salt is also limited to a level because it's essential, but not the consumption is also relatively low. I believe that unless Dicom is going to that business to support that, I can see that today, Nascom, which is into salt, they are into other things. Some other things, other products, that they are doing that have supported them. But I believe that Dicom salt was to come up with that kind of multiple product line that will support their business. For me, it's a good one that is coming up from I also remember ASO savings that have been off the market for almost 8 years.
Exactly. Ambrose, you took the word out of my mouth because I wanted to ask you, we have seen a magical move by ASO savings. What is happening? Those of us that are residents in Abuja, we know ASO savings for a very long time, but with what their operation is all about, we're a little bit scared. But on Nigerian stock market, they are doing bam, bam, bam. Let us understand what is happening to ASO savings.
Actually, it's just because the company have been lifted from suspension after 8 years. And most people that are after stock are waiting to see where it's going. But I tell you, people that are saying that the price is low compared to others into that same business in the market. And that's why, but personally, until I see the business plan for this company to kind of take it and move it to where it's going forward, just the price movement is not enough for me to jump into business. You need to understand the business model, where they are coming from and where they are going. You can see their 5 years plan. Then I cannot jump in, but I cannot jump because there's a momentum movement. And also, the difference is that in the market today, the stock is not available. Small volume is the one moving the price up. That here, people are still watching where it's going. But I believe that if they want to roll out their plan after 8 years of the market, that will be a good thing for investors to understand and read before they take position. But for those that are old investors in that company, they can still wait if they are waited for 8 years without anything. But now they are coming back. It's an opportunity that yes, that's why I tell you that in equity investment, once created stock cannot die. That cannot be taken away and come back. That's why I say stock created cannot be destroyed. I believe that that's what we are seeing now. After 8 years, they are kind of resurrected again back to the market. I believe that investors will learn from this that once a company is still there, until that company is finally not there again. But now you can see the power of world coming back to the market again. I can see how it's also changing the face of the business of price. But until start seeing the business model where they are coming from, that is where we cannot say yes, it's a company. This is where they are going. I'll tell you that.
Exactly. And for companies that will need to see their business plan for the next 5 years, Dangote Refinery business plan for the next 5 years, even 10 years is available with us. What do you make of Dangote Refinery coming with a partial 10% listing on the NGS?
You know, if you look at the nature of Dangote, you know, business or Dangote itself in Nigeria, I think that man not to be selfish in terms of sharing with Nigerians. Go and check, you know, more than 3 companies have come to market through that national Dangote. Before now, how Dangote flour, or how Dangote sugar is there, Nascom is there, Dangote cement is there. Now they are planning to bring the Dangote fertilizer. Now also the refinery now is working. For me, this man has always identified with Nigeria. Even when the major share is back to him, but sharing with that business through that, yes, they have interest, you know, for Nigerians to encourage others to benefit from what they are using. Example, if you are now in Nigeria, you are using fuel, you are part of it that as you are buying, that's why today MTN in Nigeria, what don't want to buy because they recharge, they want to be part of that. For me, I believe that it's a good concept that is selling 10% to the public, and I think that also is a welcome development.
Exactly. I won't let you go on, bros, because we are running up with you right now without you telling us what is happening to Nigerian breweries. Although they are doing pretty well, you know, Nigerian breweries, they are Eniken, NV, partner subsidiary, and they are Star larger, you know, product. All are steadily inroads into the market. And their shares, I will say, is also a boost one. But share your thoughts with us on Nigerian breweries and how they are doing pretty well on Nigerian LGS.
I would like today's program because of this reason. I'm not hearing everywhere. It's very noisy. The rain is not disturbing.
But what? Okay. Let me just cut the question. Nigerian breweries, their shares have gained a lot so far in the last 1 week. But what do you make of it? Nigeria Stock Exchange. I mean, Nigerian breweries. Is
it Nigeria Exchange you are saying?
NBS, Nigerian breweries.
Nigeria breweries. Oh, sorry, I don't discuss. Yeah, sorry, I don't discuss more on breweries, you know, personally. But for those that are seeing the figure, they can also make judgment. It has to do with the brewery. I don't discuss it. Sorry for that.
All right, interesting. But I'll let you go because I don't want to tell us much about that. But thank you so much for coming on the show. Your input on the show today is quite instructive and very, very laudable, I would say. Particularly making us to understand that at this point in time, Dangote Refinery partial 10% is something we should all look out to be part of. Thank you so much, Ambrose, for coming on the show today.
Thanks for having me. Yeah, thanks for having me.
Enjoy the rest of your day over there in Lagos. And sorry for the rain in Lagos. We are also expecting the rain over here in Lagos. I mean, Abuja.
Thank you so much. Thank you.
Enjoy the cool weather over there.